Hello and welcome. BitMonger Asia here. This is Jay, the real OG in Southeast Asia. Or I should say one of the real OGs. There's more of us out there. I'm not the only one, of course. But I have been living in Southeast Asia for over 30 years. And today I'm happy to give you some great news on our Bitcoin and what's going on with that. Some like to call it Bitcoin. But it's the Bitcoin, and it is feeling it. It is feeling it. Check this out. So, in the news, U.S. Bitcoin ETFs record first back-to-back 1 billion inflows. Man, they just can't get enough of it. Look at this. 2 straight days in a row. $1 billion in inflows. People are waking up. They are starting to realize this is a scarce asset. And guess what? I should get some. Because they need to hedge, okay? Wealthy people, people invested, they're starting to realize that this is legit, you know? I don't know what's taking them so long, but it is absolutely legit. It is not risky to be investing into Bitcoin at this stage, okay? A lot of corporates are now stacking it. I mean, of course, it would have been better to have bought it a year ago, but the fact is that way back then, there was way more risk, okay? Before the ETFs came on board, there was way more risk. And that's just a given. So that is why, one of the reasons why we're seeing this massive demand in ETFs. And it's looking really good, guys. It's looking really good. So that's news on this. Let's take another little bit and let's take a look at the analysis, because Bitcoin did just recently pump. So Bitcoin price analysis. Is a correction coming, or will Bitcoin break 120K next? And this guy, you know, he did some pretty good, this article I found to be good. Otherwise I wouldn't be showing it, but I'll be showing you my analysis soon, along with a price prediction on where this might be going. But let's read this real quick. Bitcoin has decisively broken above its previous all-time high of 111K, triggering a powerful bullish rally toward a key 120K psychological resistance level. And yes, that's absolutely true. It was consolidating for quite a while, and then it broke above that, and it went up to 118K, and it is looking to try to hit that level. And once you get, you know, these round numbers are really important for traders. And some people, when they just look at taking profit, if they've been holding this for a while, based on my past projections earlier, you know, on diminishing returns and this type of stuff, I had predicted Bitcoin was probably going to go to 120 to 130K. But based on, you know, all this increased demand and, you know, the Trump declaring, you know, a Bitcoin strategic reserve, and seeing the Michael Saylors of these guys that are putting Bitcoin onto their treasuries, and the amount of companies or corporations that are now doing, you know, using his playbook of, you know, putting Bitcoin in their treasury, because they realize, you know, the dollar is being debased. So they're doing that. Anyways, so yeah, we'll probably get some selling at profit taking at 120K. And I would expect to see some kind of pullback. He said in this article, he says, after a prolonged consolidation phase, Bitcoin has decisively broken the previous all-time high of 11K. The breakout was backed by a notable surge in buying activity, kind of like what I was just mentioning on the ETF demands. What does he think it could go back down to? Okay, so he's got, while this move signals market confidence, the 120K region is a probable zone for profit taking and distribution, which could temporarily slow down the rally. A short-term corrective phase is therefore expected, likely pulling the price back toward 111K region to retest the breakout level. Based on the Fibonacci retracement tool, key statistic levels are located at 120K and 131K. All right. Sounds about reasonable to me. I could see it doing a pullback. Let's see what I got on my map, on my own drawings here. So you can see right here, these were the previous levels that I had drawn out a couple weeks back. When it came down to 98K, is right around here. I think it was. Where was that? Yeah, it was right around here on this date. I had prior to that, I had said if it got down to here, this would be a good place to nibble, and that's exactly where it hit, and it bounced back off of that, went up into this, it consolidated, and then it broke out above this level right here, in which I had drawn, which I do believe there is a good possibility that it could come back down and touch this. It's very common. Things don't go up in a straight line, and Bitcoin is volatile. Maybe it doesn't come all the way back down there, but it certainly could. You know, if it does get back down there, I would be adding to your Bitcoin stack if you don't have any. This is not financial advice, remember, though. You do you. Consult a financial advisor if you don't know what you're doing in investing. But I'm not responsible for your decisions. I'm just a guy on the internet telling you what I'm doing or what I would do. And this would be a juicy level right here at 110, around 110 and a half looks like the major support level right there. The next area of interest would be right here, and that is ranging. You can see how it bounced off this line previously, how it spent quite a bit of time in this section right here, in this area right here, bounced up, and it actually consolidated in that area for quite a while, for quite a few days, before it did break above it and kind of test it on the bottom. So right here we're looking at, you know, right around 108 would be another great area to start adding to your bags. Between 108 and 107, call it 107. Between 107 and 108K looks to be a good juicy zone, you know, and all the way down on the bottom here, I got 106.7. So that's where, you know, I would be adding more to my bags. And if it does happen to get down to this level, you know, low 100s, then I would be backing up the truck if I didn't have a position. Luckily, I got my position sorted out, so I just nibble. I'm more doing a trading strategy. I don't touch my long-term hold bags, but I do trade some, and that's where I would be looking. Okay, so where do I think it's going? So if you look at the chart, if you zoom out on the chart, you can see this is what we call a head and shoulders pattern, inverse head and shoulders. So we got this right here. And you can see this would be the neckline, and these are the shoulders here, right? Here's the head coming down. And the way that you do this is that you measure the distance from the shoulders right here all the way down to the top of the head. And then that's what I did with this line here. So I measured the distance from the shoulder line to the top of the head, and then when I did that, I pull up that area and I put it onto the chart here. So let's see what I got here. So based on my analysis, you can see right here, based on my analysis from the neckline to the top of the head, I pulled that up, and the price target is right here at 135,912. So if it follows this pattern out, if this is correct, and it is a head and shoulder inverse head and holders, then our price target is right here, right around 136K. Okay, that's where I expect it to be going, and potentially, it's hard to say. You know, will it top out there? Will that be the top of the run? If we didn't have all this institutional demand and game theory going on, I would say yes. But because that's not happening, I cannot say that this will be the actual, you know, Pico top. Really depends, based on the fact that we're likely going to be getting money easing, more liquidity, the Fed's laying off on lowering the interest rates coming forward. I do believe that this has much more potential upside based on those macro factors that will impact the markets. All right, guys, there you have it. Hope you enjoyed today's video, and Monger on.